the best pitch is a very concise pitch that tries to make a human connection with the person on the other end. So, if you do some research and you try to figure out like what are the motivators for the person that you're pitching, you can kind of craft a pitch that you think resonates with them.
Welcome to Money Moves, the show about raising money, making great investments, and building venture scale businesses. I'm Neil Devani, your host and the founder of Necessary Ventures, a firm investing in what the world needs. Each week, we'll talk to folks who have raised anywhere from $10 million up to billions of dollars. We'll learn how they return multiples of 10x to 100x or more to their investors. We dive into their stories, uncovering what worked and what didn't, learning from real experiences to understand the journeys of raising capital and rapidly scaling a business. Money Moves isn't just for those already in the game. It's also for anyone interested in the mechanics of startups and venture capital. Whether you want to raise money, make better investments, or just understand how it all works, Money Moves gives you the insights and advice you need to succeed. So join us each week and hear from those who've been through it all and learn from their journeys. Jenny, thank you so much for joining us for an episode of Money Moves.
So excited to be here.
I want to jump in first just talking about Everywhere Ventures. You guys are literally everywhere. I feel like I see you so many events and online, on Twitter, on LinkedIn. How do you manage to be everywhere at once?
Well, it's great to hear that is the perception. So I do live here in New York. My co-founder lives in LA, I think nearby where you live. But we've really spent the last, 6-7 years building out communities we call like nodes of founders around the world. And so, there's kind of events and everywhere stuff in the community happening almost on a daily basis in places. And so I'm not always at them, but the aspiration is that, we can have a legacy beyond, where Scott and I can actually get to. So we do travel a lot. I'm on my way to Australia. Scott's on his way to Dubai, I think. So there's a lot of crisscrossing the world. But really, I think our secret sauce is just our founder and operator community, which is 500 founder LPs and then another 250 portfolio founders. So with that kind of, call it 1,000 founder community, it's really global.
Indeed. Yeah, that's a lot of people in the community, a lot of relationships to manage. How do you do that? How do you keep everyone engaged and coordinated?
So when we set out to start the fund, like Scott and I had both been founders and we'd both been investors. And we said like, okay, what are angel groups doing really well? Well, angel groups usually have like really good engaged communities. They do events and, they're very much on the ground grassroots. So we love that part. What do angel groups not do well? Like governance, fast decisions, all that kind of stuff. Then we looked at funds and we said like, okay, what do funds do really well? And, they make decisions and, there's a process and kind of a timeline for investing, all those things. So we're like, what if we can marry those two things? And to do that, to reach any type of scale, we're going to have to build systems, right? And so if we're going to like build a repeatable process and kind of a large community, we're going to have to start from, first principles of scale. And I think that comes down to software. So we decided like, okay, instead of the traditional, VC Monday morning, like meeting, we could actually, do our diligence, have discussions and actually vote on whether we want to do deals on Slack. So that was like very different, I think, than how most funds operated. So we tried to just like deconstruct what we thought worked and didn't work from our years. We'd both been investing for many years and we'd been founders too and kind of saw from the outside what it was like. And so we kind of deconstructed it and said like, okay, what are the things that work and what are the things that like we want to just challenge? And so we tried to build this kind of virtual firm in 2018, right? Kind of pre-COVID when people thought that was crazy. Like, how could you invest in companies that you just met over Zoom? How could you do your diligence and your discussion just virtually? But we built systems to do that. So we obviously are pretty heavy on the software automations. Like we live and die by our Airtable, and we have, a lot of other kind of platforms that help us have scale.
Yeah. And in addition to having a lot of people in the community, you also, I think, make a higher number of investments per year than most funds. Would you agree with that?
Yeah. So right now, I would say we are writing about one check a week. So seems like a lot, but people always forget that it doesn't mean like I meet a founder on Monday and I invest on a Wednesday. A lot of these relationships have been brewing over time, and we're kind of working people through our funnel, and sometimes that's over a course of weeks, sometimes that's a course of months, and sometimes we've known people for a couple of years and, at some point got ready to invest. So we are pretty active. As I said, we have more than 250 companies.
Yeah, that's incredible. So you have these longer term relationships or processes where you're getting to know people that enables you to have this larger community and then making this investment, let's call it one per week. On the course of a year, would you say like how many companies do you meet with that are potential investments? Like what does the top of funnel look like to get down to that 50, let's call it, per year?
Yeah. So at this point, we're getting more than 1,000 inbound on our website. So that's like real top of the funnel. Then our, call it, community of 500 founders and operators, which are LPs, and then portfolio investments, which is really the source of our deal flow, are getting another, few hundred. So we'll call that another 500 per month.
Wow, that's 500 per month.
Pretty much. I mean, it's a pretty high number of deals. And so, then with that, Scott and I look at it with, the framework that we're looking at, which like we're calling now the resilient economy. And I'll kind of go into some of the areas that we're looking at. But with that lens, what's kind of fitting into some of that framework and who are the founders that are, must meets. And then, we've got a team of a couple people and we all kind of, wear many hats and triage that. So it's not just me and Scott, but we try to meet as many founders, a week as we can. And, some weeks it's 25 founders, right? Because you can do only 5 meetings a day. And sometimes, you can 3x that and just do back to back. I'm sure you have those days where it's just like back to back new meetings. So yeah, we're able to kind of get through to a lot of founders. I guess that sounds kind of crazy to many people. I spent 7.5 years at Techstars. And so I was reviewing thousands of companies every quarter, right? So we got thousands of applications. We were doing hundreds of interviews. And so kind of this process didn't kind of come out of thin air. Like I've been trained on that for many, many years of how to, parse through information quickly, make decisions. And then, once you invest in these companies, how to support them. So I learned a lot in those 7.5 years.
Yeah, that makes a lot of sense. It's similar in that way, as opposed to the folks who maybe meet with like, 100 or 200 companies a year and they invest in 1 or 2. You have an even lower conversion rate, it sounds like, because you see so many, even if you're investing in 50 a year. You must see a really great dispersion in terms of the quality of pitches or ideas. Can you think about, at least in the last year or two, what was like one of the best pitches that you've heard, and what made it the best?
I think the best pitch, assuming that you're doing it on Zoom and you can't actually sit down and really spend time with people, is a very concise pitch that tries to make a human connection with the person on the other end. So, if you do some research and you try to figure out like what are the motivators for the person that you're pitching, you can kind of craft a pitch that you think resonates with them. And so when I was a founder, I always had like a few pitches up my sleeve. I'm sure you did as well. And actually as a GP as well, right? There are different types of LPs that we end up pitching, and we kind of have to, turn our pitch. So one of the best pitches I heard recently is someone had heard me on a podcast and they heard that like I really like a short, concise, to the point pitch. And so they gave me this pitch. I think it was probably, the whole thing. They went through slides and they got through the whole slides in like 4 minutes. And afterwards they were like, said something funny about how they'd heard I liked a fast pitch. And it wasn't that they were talking fast. It was just that they were getting to the heart of the material. They were actually keeping it high level, because I find that that's something that founders really get in the weeds quickly. And I loved it, like totally resonated with me. And I was excited to dig in on the next call, but I got a really great flavor for that founder and just, how what their vision of the world was, but it wasn't 25 minutes.
What is you don't have to name names, but what is the worst pitch, or what makes for a terrible pitch?
Yeah, I think I alluded to it. Founders are mostly, the founders that we talk to seem to be product people. I was a product person, and you're so kind of in love and excited with your product that you go really deep, really fast, right? You're in the weeds. And again, take a step back to what I just said previously. We're talking to thousands of founders a month, and sometimes in a day I might talk to 12 different founders. So I really feel like the founder's job at the end of that day is like, when I reflect back to the 12 pitches I heard that day, is like, what was the 1 or 2 that kind of made me sit up and that got me excited? And I'm probably not going to remember like the specifics about your company. And so you don't need to bombard me with facts and information. You really need to inspire me, not educate me. So I find, the worst pitches are the ones where they're just going so deep Meanwhile, like I've just had, 5 other people pitch me in the last, 2 hours, and like I can't even keep up, right? Like you all are the experts, the founders are the experts. I'm the idiot in the room. You have to kind of keep it high level. So I always say like more is less with, with pitches, and just, keep it high level. If the conversation goes well and you've like inspired and gotten someone excited, there's going to be many more opportunities to show how smart you are, how great your product is, and like all that nuance. But at the beginning, like all you want to do is like make, have something that at the end of the day, I'm like, I want to call that guy back. That was really interesting. And like, that made me want to know more.
Someone said it to me once where like the job of the pitch is, or the pitch deck is to get you the first meeting. The job of the first meeting is to get you the second meeting.
Yeah.
When you think about it that way, you stop feeling the pressure to give all of the information up front and overwhelm someone. I think I have a good understanding. Like you really value storytelling, which is such a powerful skill when you think about founders needing to be able to storytell to get employees, to get customers, to get investors. It really is that one of those core skills. That's something that you index on. Are there other things that as you go deeper in the funnel with a founder are some of the most important things you look for, like things you want to see in terms of their previous experiences or certain things about the market they're going after? Like what are some of the most important things you look for?
Yeah, I'd say I am previous experience, things about the market are way less interesting to me than like the actual conversation that the founder and I are having and like where we can take that. So what I mean by that is oftentimes like we'll have a first meeting and, we'll give some feedback on like things that we're thinking about or whatnot. And like, we love those founders who come back to us with 24 hours and they're like, hey, I was thinking about what you're saying. And we talked to our team and like, this is how we're thinking about it, or this is an angle, or like, actually, we're planning to build something like this. So we call these the high-cadence founders, the founders that are very action-oriented and that they're not just, so buried in their process where everything is going to, is on a schedule, because we just don't believe that that's how startups work. Like you're just moving really fast. So if we can get the sense that this is a high cadence founder, and sometimes it's not even about their product. So I'll give you like a really interesting example. Oftentimes when we're negotiating financings, we love when a founder can like make their own decisions about things as opposed to, oh, let me ask my lawyer. Now, I'm not saying you shouldn't talk to your lawyer, but I think like the founder has to understand like what is pro rata? Am I giving that to people, and be able to kind of negotiate with the investor themselves as opposed to outsourcing things. So we love those learning founders who are really fast, who can make decisions and are like super engaged in all parts of the process, not just the things that they want to be working on, if that makes sense.
Yeah, it makes a ton of sense. I like that perspective. That's kind of unique and does obviously indicate as well that they can do the things they're going to need to do to build a venture scale business. What are some things you think that other investors over index on or they look for that you don't really care about? You kind of hinted at it, but are there things that you think everyone else is too obsessed with and should stop being concerned with?
Yeah, I went on a whole rant, I think it was earlier this year, about how all these investors are obsessed about market size. And like the best companies in my portfolio that are unicorns and beyond, no one knew the market size because they were building products in a market that didn't exist, right? So, I mean, like those are really cool companies, right? So I invested in a blockchain analytics company in 2015 and everyone said, seems like a good company, founder has a great pedigree, but small market. And I was like, yeah, but you have to listen to what this founder is pitching as where the world is going. And if you believe in that vision, then this is the best founder to grow into that market. So at pre-seed, if you're going to be investing for, I expect to be on the cap table of many of our best companies for over 10 years, then where do you think the world's going? And the market may not be there yet. So it kind of drives me crazy when investors at such an early state have a lot of conviction that it's a really small market. And sometimes that's just the founder hasn't articulated that maybe this is a beachhead or how they see this rolling out. And, it could be on the founder side, but I often find that the investors are kind of short-sighted on these things.
You're making me think of like Airbnb and Uber, right? Or it's like, how many people are actually going to do that? How big are these markets? And clearly very big. What has been your best investment ever?
Well, I think that reminded me of the blockchain analytics company. So that's a company called Chainalysis. They're the leading blockchain analytics company. When I invested them in 2015, I couldn't get them fund it. Like that was my job, was to, I mean, I was the pre-seed, and it was like really to help them raise that round. And, everyone wanted to take the meeting and no one really wanted to invest, not because like the founder wasn't awesome and the product didn't look good, but really because the market size. So yeah, that's one investment that, has worked out pretty well. And now that crypto is ripping again, the company's doing even better. So excited about that, but also just really, proud of that investment, and, that I could be an early believer when other people didn't want to believe. So that's it's not only a great investment, but a very meaningful one for me personally.
Yeah, I could see that. I want you to be less humble and brag a little more. Can you tell us like roughly like what the multiple is, or like the entry valuation, current valuation? Like take your moment in the sun here.
I don't even know if I'm supposed to say this, but the fund it came out of, I think, is over 1,000x. So maybe we'll leave it there.
That's a good number.
I mean, the company is still
Yeah.
going, just on, the realizations that we've had from that company.
Wow, that's incredible. At the time, when you saw this and it wasn't something that everyone else was looking for, what did you see that made you want to invest? How did you know there was something special here?
Yeah. So I think, you had mentioned like founder that had a background. So in this case, the founder had built another exchange. He was actually the co-founder of another huge exchange that you know of, and had a unique insight from building that exchange that like, oh, this was going to be big. And if people were going to use, the blockchain and we're going to be investing in crypto, they were going to need analytics around it. So his insight came, as many founders do, from building one product that kind of led to this insight in another product. And I love founders like that. And we've backed many founders who sometimes their companies don't actually work out. So we have a company from our fund one that had to shut down, but through that experience, the founder had a very unique insight about an adjacent market, ended up starting a company. We were his first investors in fund two, and it's one of our top performers. So the big lesson there for me is like, when you find a great founder, just keep on backing them. And sometimes, it's not the right market, timing isn't right, it's not the right product. There's lots of things, but as at the early stage, it's really about the founders. And if you think they're, these are visionaries, that they have the DNA to build, huge impactful companies, then keep on backing them.
That makes a lot of sense. What would you say you've learned from some of your worst investments, whatever you'd categorize as the worst? What are the things that lessons you can draw from those?
Oh my gosh, I have so many lessons. Well, my worst investments are the ones that I think I missed, right? So I've missed some good ones because I was, a huge stickler on price. And although I still am very, very price sensitive, I think when you see, something that you really believe is an outlier, figure out a way to put a check in. So even if you're writing a personal check, you're writing a scout check, something. So, I mean, there's some big ones that I've missed. Plaid at the pre-seed. I mean, just the list goes on because I thought it was a little too expensive, or things that actually just don't matter. So it is important to have discipline, and we at Everywhere are super disciplined. So we invested the pre-seed at very reasonable valuations, and you just can't get caught up in frothiness. At the same time, like, don't let a slight uptick in evaluation. If you love that company, you should figure out a way to make it work. So I'd say like my biggest mistakes are really my misses. My biggest mistakes in things that I've invested in, probably similar to many investors, is that I didn't do enough diligence on the founder, not on the market. Like that's going to happen, but on the founder DNA. And so, yeah, I've just had to learn my lesson. Like, just because you've got, I'm very, gut oriented. If I have like a great meeting with a founder, I am like, have a visceral excitement that I want to invest in them. But you just can't cut corners, right? Just because you've had like a great meeting, or you feel like there's some meeting of the minds, or you see something like very shiny, like just don't cut any corners. So I've learned that the hard way as well.
What is the opposite of cutting corners? Is it just more time one-on-one with them, or is it like back channel references, or what are the ways that you do a thorough job on that?
I think it's all of the above. I mean, what's unique about Everywhere is because we've got this kind of community of 1,000 people, it's pretty easy to get information on people. So in our case, like, we have people in all geographies. So if it's a founder building in Austin, Texas, we've got 50 founder and operator LPs and portfolio companies that are in Austin, and, someone knows this person, right? I mean, they've come in already through one of our community members there, but there's probably a lot of other people. And so, don't take one person's word for it. Just like spend your time talking to a few people, about that founder. And yeah, spend more time with them, right? I mean, everyone has bad days and you can kind of over index on that. You had a bad meeting or something like just didn't jive during the first meeting, but maybe that person deserves another chance, or maybe you were having a bad day. So I'm all for that as well. Same thing, you can have an amazing first meeting and the second one is really flat. So just spend the time. I think we're a little bit luckier now as investors that we tend to have a little bit more time. During the boom years of 2020, 2022, the deals were happening so fast and it felt like, decide by Friday. And that was like a frantic pace that I don't think was good for founders. And I don't think it was, good for investors. And so I'm glad that we're past that a bit.
I agree 100%. I want to shift over talking about fundraising, especially your experience as fundraising. But before we do that, what advice would you give to a pre-seed founder who's looking to raise their first round of funding and they've never raised money before, just getting started?
Yeah. So I think for first-time founders, it's definitely a hard market. So the market out there, I'm calling kind of the have and have nots. And so, the way that I'm dividing that up is like, if you're a second-time founder with a great network, you're probably in the have bucket. If you're building in a super sexy space, right, you're doing something in and around infrastructure AI or something, you're in the have bucket. Everyone else, and that was me building, my first company, we're kind of in the have-nots, which means we really need to prove ourselves and we need to be super, super, prepared and organized to get our fundraise done. It's just going to be harder for people like us, right? So the biggest piece of advice I give first-time founders is you're going to have to build a great top of the funnel with investors. And in this market, you, as a pre-seed investor, you may need to talk to 75 investors. And so that's a lot. So, you've got to build that funnel, and you can't build your spreadsheet with like NEA, Lightspeed, and, Andreessen at the top, because those aren't really pre-seed investors, despite what they say on their website, or they tell you like their sweet spot is at a different level. So you're going to have to do the research and really find people like you, like me, like the dozens of other folks that actually really do live and breathe by early stage. And the best way to do that is to, cross-reference not what people say on their websites or what they say in podcasts, but just through data. And so you have access to great resources, Crunchbase, PitchBook, lots of information that can tell you not the rhetoric, but the actual data. So I find that once I direct founders, to the profile Crunchbase, and they see that the last round that this investor did was 30 million, and the round before that was 20 million, and the round before that, and they're a pre-seed company raising $1 million, they kind of understand that maybe there is always a chance, but that, that's probably not going to be the investor for them. So I think just doing the research up front, being super, super organized, creating a funnel and running it like a sales process, right? So you wouldn't ask for intros here and there and then get distracted with other things. Like if you're going to close that customer, so to speak, like you're really going to run an efficient process. There's going to be follow-ups and, you're going to be closing the loop many times. And so if you can do that, then I think you'll be, a great fundraiser. Despite the fact that you might be a first-time founder, you might not be building in one of these sexy spaces, and you might not be super well networked, but you can do it.
I think that's great advice. And I see people make that mistake all the time. I also see founders just get discouraged after 10 pitches with investors who were not in the right profile for them. And it's the wrong message to take from that data, right? Which is you just got to find the right people versus pitching multi-stage funds when you don't have customers or revenue yet. Let's talk about your own experiences fundraising, that you've raised a few funds. When was the first time you ever raised capital?
In 2018, while I was working full time, I went out to raise my first fund, and we raised from all founders and operators in the New York community. And I was pretty lucky because I'd both been a 2-time founder in New York, and I'd been running Techstars New York. So with those two things, I actually knew a lot of people and I knew a lot of founders, and I'd helped a lot of founders, right? And so those were the people that I went back to. And I always kind of encourage, first-time fund managers as well to like go to your community that you've been a part of. And it doesn't mean that you need to like come from wealth or any of those things, but like, who are the people that you've kind of helped? And that could be you're working at a larger, tech company and the execs there. For me, it was founders in the New York ecosystem. So my first fund was raised entirely in New York and entirely from founders that I knew.
And how much were you raising at that point?
Our first fund was small, it was about $5 million.
when you think about that process, how many people did you have to speak to convert how many investors into that fund?
I mean, we did pretty well on that one. I think the secret to fundraising from individuals is kind of similar to what I just mentioned to, about first time founders, was we just had a lot of top of the funnel. And so we qualified people, like we kind of looked up their, if we didn't know them, we looked up their profile and saw, had they had exits and kind of what their situation was. So we did a lot of top of the funnel qualifying. And then I think when we went to them with the value proposition, again, it was 2018, there weren't a lot of, micro funds, and we had something that sounded a little different, a by founder for founder community, where we were doing a lot of events and we were kind of trying to build something special in New York, which I think in 2018 was pretty unique. And so people were really drawn to it. So that fund, went pretty quickly, I'd say. And then our next fund was kind of a scout fund. So we kind of had a core strategy and then a scout strategy. And that was where we started partnering with other founders and operators in other geographies. And I'd say that one we learned a lot, because there were some geographies like LA where it went great and we were able to raise really quickly. And then there were some geographies where, like the Midwest, we thought like, oh, wouldn't this be really cool to bring our model to the Midwest? And that one was a little more challenging, even in good times. So we raised that scout fund in 2020. And it was hard in some geographies to kind of get that community together, get people excited about venture, because it wasn't, New York or San Francisco or LA. So we definitely learned a lot in those. And then our most recent fund was in 2022.
Awesome. And yeah, the most recent fund, I think, was quite a big step up on a relative basis, 25 million. Is that right?
Yeah.
And you closed that in what was one of the hardest markets to close a fund in 2022. What was that process like?
Yeah, so I had been running the fund with my co-founder part-time. So we both had other kind of full-time jobs. And in 2022, we made the decision that I was going to leave Techstars and, he was going to focus on this full-time. And we were kind of like really going to be in business after doing kind of 2 proof of concepts. Well, nice timing, Jenny. Like I could have done it in 2 seconds in 2021, but by 2022, I went around New York City and everyone's like, yeah, I love you, Jenny, but no money, tech is crashing, like not happening. So I was like, So we still raised from our founder and operator community, but we were able to kind of tap into some other pockets of capital, mainly family offices that were international. So tech kind of downturn happened a little faster here in the US than maybe it did in other places, which is interesting. So Scott and I just got on planes. We met folks in other locations and we were able to bring in about 4 family offices in Europe and close off the fund. We did it pretty quickly. So we raised the whole fund, I think, in less than 3 months. But I was doing like tons and tons of LP calls, like sometimes 5 hours a day, just like pitching my heart out in a really, really tough market. So I definitely felt like what it was like to be a founder again in 2022. But we took our own medicine and we just said, like, for every no is a gift, because like we don't have to spend time on that. We just need another one to fill our place. So what we did, if you want like the tactical of what we did, is we basically called all our GP friends. I'm surprised you didn't get a call from me, but maybe you did. And we just said, we're on the cap table with you. Like, we've had a good working relationship. Is there an LP, that you think would be good for a small fund, community based? We kind of gave the line. And for the most part, GPs were like, oh, I can't give you 1. I can give you 10. Like, I have so many good people for you, Jenny. And I'd always say the same thing. I'd be like, no, I don't need 10. I just need 1. And I need that intro in the next 24 hours. And here's all the material. So I had all my material prepped. I had a clean email for them, like with our deck, with our blurb, whatever, in their inbox by the end of every call. So I made it as easy as possible for them to be walking down the street in San Francisco and forward it to one of their LPs with 1 click, not have to do anything, cut, paste, write any intro. It's just like they could do it. And I only asked for 1 intro. So not a whole laundry list, just give me 1 person that you actually think is good and do it quickly. And that converted really well. So yeah, I think having a lot of other GP friends and, being good stewards in the ecosystem paid off for us.
What was the thinking behind saying only 1? I don't want 10.
Because when people ask, like, people are so generous and they want to help you so much, at least like our GP friends do. But the truth is, like, no one has time. And so if someone says like I have 10, it means like they're never going to get to it, or they're going to get to it in 2 weeks when they've like put it on their calendar and they're sitting down and whatnot. And so it's just like we know how busy we are. And like even when founders ask me for, 10 intros, I'm like, okay, that's going to take a lot of time. If you ask me, for one, like I can just do that literally while I'm on the subway, while I'm walking down the street. Like I can just write a quick one. So we were kind of taking our own experiences of just how busy and intense this job is, and can be, and saying like, we get it. Like, I'm sure you could make 10 great intros, but if you just give me one and you can do it in 24 hours, that's going to be more impactful for me. So the whole idea is like not to burden people and to do something that's realistic. Because I think also as GPs, we're optimists. And so sometimes we can not over promise, but like we want to help, right? And so like, we're like, of course, Neil, like I'm going to do all this stuff for you. And then at the end of the day, you just have like mounds and mounds of work, and then you need to like start the next day. So, if you ask for something that's reasonable, we felt that people could do it and not feel like it was like, shit, I didn't do that thing for Jenny, right? We didn't want people at the end of the day rolling their eyes and being like, not taking our calls type thing.
Yeah. That's it. That's brilliant. I like that a lot. That's really, really, really insightful. Let's talk about pitching again. And this time, you pitching as a GP, you shared some really good insights and wisdom around founders pitching and making connections. Are there any pitches that you remember giving to an LP where you were like, yeah, like I just nailed that. That went so well?
I mean, can I give you the opposite? So I did one. I thought it actually went fine. The guy sent me an email afterwards, and he said, I thought that pitch was, like he gave me some compliments. You seem very impressive. You have a great track record. Blah, blah, blah. That pitch was very convoluted. I'm going to help you streamline it. And he just wrote down like 4 bullets of like why I was doing everything I told founders not to do, getting in the weeds, telling too much of the story, telling the nuance that no one cares about. And he just wrote it in bullets. And like most people don't do that because people get grumpy about that. And, there's really no benefit to him to do that. I didn't really know this guy. And honestly, it was like one of the most meaningful things, because like most people just don't give you the feedback. So the fact that I got the feedback was great, and I was able to course correct. And I remember pitching him again, and he was like, that was a huge improvement. So yeah, I mean, I think that like that was a bad pitch that turned into a good pitch based on someone being really honest. And, most people were not incentivized as, investors with founders and LPs with GPs to really tell the truth, because once in a while you say it to someone, they take it the wrong way, and then you never want to give feedback again. So totally get it. But this guy went out on a limb for whatever reason, and he gave me really critical feedback, and it kind of changed the trajectory of a lot of things. So a lot of gratitude. I think the best pitches are where we talk about industry trends. We talk about like interesting things that are happening in venture, and we don't talk about like our fund portfolio construction or strategy, right? Because all of that stuff is like somewhat fungible, but we just like make a connection on something, right? So like my best pitches are when we just start like geeking out on something that's happening. Oftentimes it starts with like, an LP saying, oh, I saw like a tweet of yours, Jenny, or something like that was like provocative. And then we like have a discussion about it, and we spend like a lot of time talking about that. And so I think, again, making the human connection with someone. Now, if you're a founder or you're an investor, like you have to get your pitch in, like you have a narrative and you can't like shoot the shit. Like I'm not suggesting that, like you've got to control the conversation. But again, like making a human connection, making someone smile, them feeling like they're heard, and, they're kind of enjoying the 30 minutes, I think is really important. So figuring out a balance of like getting your message through. So yeah, those are my best meetings.
Tried and true advice. I think it's great. What are your thoughts around building relationships with folks, with LPs specifically, before you're raising, or only talking to them when you're raising?
Oh my goodness. Kind of go back and forth on this. Like, I think it's probably best to build relationships between cycles. I think you have a good conversion. I think that's probably true for founders as well as GPs. And so I think it's also kind of exhausting when you're running your business, right? So we don't do a ton of fundraising between cycles, but I would say we try to spend 1 to 5% of our time doing that. So if someone opportunistically, which happens all the time, hey, you should meet this LP, I don't say like, no, I'm not fundraising. I say, of course, right? But the truth is, like, am I spending time trying to develop new relationships and mining my database between cycles and whatnot? Like, I'm really not. So probably should be. I think it's probably good hygiene. Maybe you can tell me how you do it, and I can learn some things. But we don't do a ton of that, and we probably should. But I would say we spend 5% of the time. I mean, I go to a lot of like GP-LP dinners. I feel like I kind of know a lot of LPs, even ones that won't invest. Like, I did a fireside chat with like one of the biggest fund of funds, and like, I think they've never really said no, but they've kind of just said no, like, you guys are too small. But I still do those panels, and I still engage with that with that group. So I think it's good to make friends across the industry.
I'm pretty shit at it myself. So I don't know if I have much advice to share, but I know it's a good thing to do. I know it's the right thing to do, just not something I've been good about prioritizing, which hopefully will change in the future. What are your thoughts around following up? A question I like to ask people are you someone who will like follow up once, and if no one replies, okay, forget it, they're not interested? Or the other end of the spectrum, one of my friends who's a GP is like, I will follow up over 10 times before I give up. And I'll get someone to say, hey, stop following up, we're not interested. But that's my job, is to get to that point. Where do you fall on that spectrum?
I'm more in the FOMO camp. I don't believe that chasing people works. I think that you need to have a product that people are chasing, right? So I follow up after a meeting, because there's always like a follow-up, like, oh, send us your deck, send us your data room, send us your model, all those things. So I'm like meticulous about not dropping the ball. Like, everything is in our Airtable, we review it all the time, and like we do follow-ups, but I don't chase LPs. Like, my product is like more binary, I'd say, right? Because we're writing a lot of small collaborative checks. So in every fund, we're going to have like 75 or 80 investments. And the vast majority of LPs do not like that strategy. But the 20% that do, they actually really like it. So during a meeting, I can kind of tell there's a little twinkle in the eye, like, oh, you're one of those. You're like, you do a lot of checks, like you believe more shots on goal is good. So I feel like my job is to find those people, find my true believers, and then spend time with them. My job is not to convince people that want traditional venture, right? So 80% of the LPs out there want the same product. They want a seed fund where you have 20 to 25 investments, and you have a same, you do your one-to-one reserves, and sometimes it's a third reserves. Like, that's where it's on the edges where they're changing things. They don't want a radical new approach, which is a high volume, high cadence fund. And so that's fine, because like I can just spend my time with the 20% that really love it, and that see it as downstream co-investment opportunities, and that see that we actually returned our 2018 fund. So like, the math, it can actually work. Small funds can really work. So I'm looking for those people. And when you find them, you don't usually need to chase them, because they're pretty excited about it.
I think that's very true. And I think it's a struggle sometimes where GPs get in a situation, or founders, where they're not getting that pull, and they think they need to just keep following up, which can also convert, right? I have heard those stories as well. But a lot of times it's a question of like, are you talking to the right people, or is your product the right product? What can you do on those two vectors versus following up 10 times? All right, we're going to move into the end of the episode here with a lightning round, some different questions. So first one, what food would you eat if you could only eat one food for the rest of your life?
Pizza. I'm from New York. Come on. Give me a slice.
Just cheese or any toppings?
Just cheese.
Perfect. Classic. What's the hardest lesson you've had to learn in your career?
Venture is both a marathon and a sprint. So you run really hard at something, and you have no feedback. You don't know that you're good at it for many, many years. And in fact, I almost gave up 5 years in, when I hadn't returned $1 of capital. And I went to my mentor, who said, like, this is normal, Jenny, you knew of signing up. But I think that when you're kind of like a type A person, and you're just like used to quicker feedback cycles, it's tough.
I'm glad you didn't leave the industry. And that's a great mentor to have, someone to give you that feedback. What's been the best moment of your career so far?
The one that I mentioned before, which is like, just having a few companies that are, world-changing companies, and, having the founders say, like, Jenny believed in me before anyone else. So I think those are like the moments that you're like, okay, this is a marathon and a sprint, but like, this is all worth it because I'm investing in, really impactful companies that are employing thousands of people and creating all this value in the world. And, I saw something that others didn't. And it was really, I saw, a spark in the founder. So it's not that I knew the market or, any of that BS. It was just that, I believed in this person.
Yeah, there's something really emotionally fulfilling, right, in that experience of believing in someone before anyone else does. Okay, last question for you here. Who has helped you the most in your career?
Oh my goodness. I think really, my colleagues. I didn't train anywhere to be a VC. And so I've learned everything through, people that have been very patient with me and, my colleagues at Techstars. I'd never been an investor before. And I just like learned a ton from the other managing directors. They became my thought partners and my circle of truth really in this industry where you don't get feedback, right? And so you kind of have to rely on other people telling you, giving you hints along the way and those breadcrumbs and feedback. So I'd say kind of my colleagues early on in my investing career were just super impactful.
Well, that wraps us up. I really appreciate you joining and for being so open and sharing your insights with us.
Thank you so much, Neil. This was so fun.
Thanks again for tuning in to this episode of Money Moves. If you learned something new or just loved this episode, click below to subscribe. See you next week.